This is your market close update. U.S. equities ended mixed as Tesla and Palantir extended sharp declines, reflecting renewed caution towards stretched high valuations. Meanwhile, the dollar strengthened and treasury yields fell, showing a continued preference for defensive positioning among investors. From a technical and valuation perspective, the equity market now stands at the boundary between a hold and a buy zone. The VU weekly RSI has eased to around 65, showing that momentum is cooling but not yet reversing. However, valuation pressure remains evident, with the TTM per still near elevated levels, indicating that the market's pricing continues to reflect optimism rather than deep value. The fear and greed index dropped sharply to 23, signaling a rapid shift in sentiment from greed to caution. At the same time, margin debt relative to circulating liquidity remains close to its post-pandemic highs, which means leverage risk could amplify volatility if the market turns lower. Taken together, equities are positioned near a technical inflection point, but high valuation and leverage suggest patience is still required before re-entering aggressively. Bitcoin, by contrast, presents a more attractive technical setup. The weekly RSI has dropped to the mid-40s, placing it within a moderate buy zone. The MAVREV ratio, near 1.8, indicates prices remain only slightly above realized value, showing limited downside risk. The Bitcoin Fear and Greed Index, around 23, aligns with oversold sentiment historically linked to accumulation periods. These indicators suggest Bitcoin is entering a favorable phase for gradual accumulation. Investors may consider dividing available cash evenly over the next 50 trading days, building exposure through steady, controlled purchases instead of single-point entries. This systematic strategy fits the current oversold technical context while reducing timing risk. Overall, equities remain at the border between caution and opportunity, restrained by high valuations and leverage. Bitcoin, on the other hand, offers a technically justified accumulation setup. Remaining data-driven and discipline continues to be the key in both markets. Investing always involves risk. Make your decisions based on data, not emotion.